initial idea was to break into this already existing trade system and displace the Portugals. So in the same way that trade in the Western Indian Ocean was flourishing before the arrival of Europeans, the South China Sea region in Eastern Indian Ocean was a trade hotbed, perhaps even more valuable because of the riches of China. And it seems that the Dutch originally planned to try to break into that existing trade network on equal terms. Like, according to Jacob van Neck, the captain of the first successful expedition to Indonesia, the plan was, quote, not to rob anyone of their property, but to trade uprightly with all foreign nations. But pretty soon, that idea of free trade gave way to the hard reality that competition meant, lower prices. And by 1601, there were enough successful trade companies that the cost of buying spices in Indonesia was going up. And also, there was suddenly tons of pepper in Amsterdam, which meant the price that could be charged for that pepper was going down. Clearly, something had to be done. Ideally, that something would have been lower prices for everyone and an efficient marketplace. But the something that happened instead was the VOC. Let's go to the thought bubble. In 1601, the United Provinces, aka the Netherlands, were governed nationally by a representative body that met at The Hague, called the States General, although each of the individual provinces was largely self-governing. And the leader of the States General was able to convince all the provinces to accept a single entity to monopolize the East Indies trade. This new company, the VOC, was run by a 17-member board called the Heeren 17. And these directors supposedly had control over a company that was chartered with the power to hire its own people and also to wage war. I say supposedly because, it took a year for communications from the Netherlands to reach the East Indies and another year for company officers to respond, so the VOC basically operated as its own sovereign nation, with the power to use as much violence as it needed to build and maintain its trading power. Like, according to author Stephen Bound, the VOC would essentially operate as a state within a state. And the VOC, together with its sister company, the West India Company, did use violence, attacking Portuguese and Spanish settlements in Chile, Brazil, East and West Africa, the Persian Gulf, India, Sri Lanka, Indonesia, China, and the Philippines between 1602 and 1663 in what you could think of as an early world war. The VOC was also different from a lot of corporations because it was initially funded with 6.5 million guilders, about $100 million in today's money. And that capital was expected to fund business ventures for a long time going forward, not just for one initial trade mission. And this long-term business thinking was unique, especially compared with the funding strategies of the VOC's biggest competitor, the British East India Company, and it reflected the advanced financial acumen of the Dutch model generally. Thanks, Thought Bubble. So we've got this company that's basically also a country. And it's not a particularly good country because it doesn't have any of the responsibilities of government, nor does it have to answer to the people it's governing. All it has to do is make money. And it was really good at making money. By 1648, the United Provinces were in better financial shape than every other nation in Europe. You can tell this partly just by looking at interest rates. Now, admittedly, interest rates are only one measure of financial health and power, but they're an important indicator even today. So Dutch businesses could borrow at a rate of 4% annual interest. And that's pretty cheap compared to the 10% it cost corporations to borrow money in England, or the 24.99% it costs me to borrow money on my credit card. And because Dutch debt was so much cheaper, they could invest 2.5 times as much in pretty much anything than the English could, including an army and a navy. And this gave the Dutch a huge head start over their rivals. So one reason the interest rates were low was because the companies were healthy and they tended to pay people back. But another is that normal Dutch people were already used to investing their money in bonds that had been issued for land reclamation projects, the famous dikes and windmills that turned land below sea level into fields where you could grow tulips, or maybe something else, but all they ever grow is tulips. According to business historian William Bernstein, the tradition of investing in bonds, quote, carried over into trade. After 1600, Dutch citizens would consider it just as natural to own a fractional share in a trading vessel to the Baltic or the Spice Islands. And a fractional share is another really interesting idea embraced by the Dutch that allowed merchants to bear greater risks by purchasing smaller percentage shares in business ventures. It's much better to own 1/10 of 10 ships than it is to own all of one ship, because the loss of a single trading ship won't ruin you. And Dutch business people also enthusiastically invested in futures markets, guessing what the price of pepper would be 6 months or a year from now, and they created new financial instruments that could be bought and sold, and merchants purchased maritime insurance, which further lowered their risk. And lower risk means you can invest more of your capital until eventually eventually you have a completely efficient market and everything is perfect until the 2008 crash. Wait, what were we talking about? The Dutch financial system and its corporations were simply better than their competitors, and that's why they seized the lion's share of the trading business. But that isn't the whole story. Like, one reason the VOC was so successful was government sponsorship and centralization. The VOC had been chartered by the States General, and it could count on the Dutch government to back it up with money and military support. There's another benefit to being sponsored by your government, which is that it's very hard for competition to emerge because it isn't sponsored by your government. For instance, in Indonesia, the VOC had a single governor general managing operations, while the British East India Company was more of like a collection of trading posts, each competing with each other for a share of the spices.